just to sound like a broken record for the one-to-one students, just because we discussed this in quite a bit of detail. The long and short of it is that we had a negative dollar outlook this week, okay? I'm not going to go into all the fundamentals stuff because I've spoken about it to death this week, okay? But I would highly recommend you and every student to spend some time on sites like FX Street, just reading top articles, and you'll start to build a bit of a theme, an understanding of what's been going on and what's being talked about. The things that are talked about are generally what's affecting the marketplace. Obviously, we have our market tool that we discussed on Wednesday's call as well, and as you can see, all of the technicals were pointing to a negative dollar. Lots of negative news, lots of negative kind of fundamentals, and what we effectively did last week is we just allowed those technicals to align with those fundamentals, which is why for those of you who were selling dollar last week, so potentially buying EU or buying GU, sorry to bring up GU, Jordan, I know we've probably fallen out with GU. Jordan got absolutely done yesterday with the CME outage. 200 pip slippage. 200 pip slippage. I'm so sorry for your loss, dude. But
all good.
Shitty brokers, mate. Shitty brokers. So you would be buying EU, buying GU, buying AU, buying NU. So those I think a few of you got involved with the NU trade with me, and then obviously selling USD Swiss, selling USD CAD, basically selling the dollar, okay, and trading that accordingly. So I'm going to talk through how we could have used that theory to help influence our trades, okay? I'm going to go on a blank EU as per the usual, and then it's just, oh no, that's the wrong one. Do you know what? I think that's why sometimes my sessions indicator disappears, because I think I click remove indicator by accident. I think that's what it is, you know. I think I've just cracked it. Right, so pretty safe to say, since Monday, okay, pretty bullish, right? Now, the way that the fundamentals can help you is they can give you a forecast, I suppose. I suppose is the best way to look at it. We're not here to expect the market to do something or to do anything, but it can help us and give us a forecast. We didn't get that bearish news, by the way, until Tuesday, okay? And as you can see, Tuesday is here. Okay, so those of you who don't know my charts yet, my orange section is my Asia session, and my two purple sessions are my trading windows, okay? So Tuesday starts here, and as you can see, we had bearish news come into the marketplace. We had the budget stuff, which the market reacted to quite badly, if I'm honest. And then we had the US news, and there was something else on Tuesday. Does anyone remember what else happened on Tuesday? A missile attack in Iraq, pretty sure, wasn't it? About midday on Tuesday, there was some missile attack in Iraq, and that's, was it that? I'll tell you where I'll find it. I know where it is because I sent it to Sam. Peace talks, apologies. So there was a missile attack in Iraq, but also there were peace talks. So Trump negotiated some peace talks with Ukraine and Putin was like, yeah, I'm here for it, basically, let's have a chat. And that seemed to whack the market a little bit. It basically gave us a bit of a pullback, and then the fundamentals continue on. So what you'll find a lot with the news is you'll understand that you have to build a theme in the marketplace, okay? You can't just be like, oh, the news was bad, therefore the market's going to go down. It's like pressure building, okay? And if there's enough negative news for a currency, then the market will go down. But it will take time for that to play out, and it's a whole market, whole economy view that you're looking for. So when we had those positive talks about Ukraine and Russia, it did cause a reaction to prices. You can see here, this pullback here, and you can see it really prominently on Goldlet on Tuesday here. We had this big pullback, but then the general theme of the market, which was dollar short, so gold up, safe haven, kind of came back into play relatively quickly, okay? So it's just something to be aware of. Now, we then had some really clear momentum from that negative news on Tuesday afternoon, which is the retail prices and that sort of stuff, okay? So consumer confidence, retail prices, all that shit, all right? So long and short of it is that we were short on the dollar, which means for me, I was just very simply looking for longs on EU. Now, I'll be honest, I don't actually think I took any trades on EU last week. I was in other pairs which I felt were better or more appropriate. Let me just double check and I'll tell you. I don't think I took a single trade on this pair, so this will be good for me as well. No, I took one buy on Tuesday on 1.5633 at 0.5633 at 2 o'clock. 0.5633. Okay, let's have a look. Must have been on this pullback. Stop loss was 5504. That can't be my stop loss because I would have been stopped out. Has it ended after that? Did I enter into that? Do you know what? I can't remember. That's bad, isn't it? Let's go through it. Let's talk through it. So Monday, okay, I'm not interested in trading it. As you can see, we are bearish, okay? We've got no indication where we're going to go next. And if anything, you should have been taking a sell, okay? If you found a trade setup, that would be the trade that I would have taken. There's no kind of liquidity grabs or anything going out along. Now, really good hack, guys, when you're at the start of the week is to just make sure you're marking out any kind of key areas, okay, that might give you some sort of liquidity. All right, mark those out and then either allow those to break, okay, or, oh, I know, I remember the trade now. Yeah, okay, fine. Allow those to break out or you allow them to sweep, okay? So when I start the week, I'm looking for key liquidity points. Those of you who watch my end of my morning analysis will see that I mark out these key liquidity points and then I use those for potential areas that I want to be swept or broken, okay? So we had this news come in. I remember the trade now, and then I entered 2 positions, so I took a second position. I think I was going through. So this position, stop loss was 1.15417, and then my entry was 1.5616. Okay, cool. So that was my trade. Okay, and it was just a case of just riding this up. Nice little short position out Tuesday. So when I trade on a Tuesday, I'm not after anything particularly great, okay? 1.5, 1.6 I'll be happy with. I got out of this one about 1.5 because it hit the final TP overnight, as you can see there. And that was just drawn off this liquidity point here, okay? That was my TP. Now, I only have a TP1 when I trade on a Tuesday. I don't have a TP2. I don't hold my trades. As you can see, I could have held it a little bit longer, but I'll be honest, EU didn't do a great deal for the rest of the week. So that would have been the trade that I would have taken. Now, we technically... No, we didn't because we hadn't even shifted. I mean, let's just go back and look through this. So let's go through our structure. Market was bullish from here. Okay. 15 minutes stays bullish. Unless you're classing that as a 15-minute low, which I suppose we could. Okay, let's say we have shifted bullish there. We get first break, true break. Yeah, so you don't actually get a trade until I entered, to be fair. That's the first trade opportunity. That's a relatively high-risk position, I'll be honest. This was off the back of the news and the fundamentals that we had to support this trade. This is why I took this trade long. This is a relatively high-risk position. You can see we are above external liquidity. We do obviously have an area to tag into, okay? We are bullish, we have shifted bullish, and we are, pretty low in terms of, liquidity down there. But that's exactly another reason why I will only take these trades relatively short. And what I mean by that is I will come out of them as quickly as I can. And I'm just...
Can I ask a question, mate?
Yeah, of course you can.
Has that actually turned back bullish because it hasn't broken the previous high?
Yeah, because this is a structure here.
Right.
This high to this low. Okay. Although this didn't create any new structure in itself. Okay. This was the last valid structure. Okay. And then we have a significant high because it's visible, clear, and standing on its own, and a significant low. So although this didn't create any new structure itself, I would use this as a structural point to be broken. Okay, and if you want to be, I suppose, a purist, you could delete this altogether and you could just use this last range, which, as you can see, so the reason why I do it like that is because for me, that just makes a little bit more sense having that range, because it's a little bit closer to price, and it will have, as you can see, I mean, it's relatively equal to be fair, but it will have liquidity sat above here and sat below there, just like this has liquidity sat above here and sat below there. What effectively is happening in structural breaks is it's basically saying that if this high isn't able to reject price, and price is able to close and continue on, not once, but twice, it's showing us that this liquidity doesn't hold enough value to continue that bearish momentum. Okay, that's effectively what a market structure shift is. We use the second confirmation, as you know, we use the true break, okay, because as you guys know, the first break is just not sufficient to quantify a shift in structure. So we've already got a bit of a bullish theme, okay, because of these shifts from this section of price. We failed to make any new lows below here, and then we do have a weak shift bearish, but then we almost immediately shift back bullish. So for me, that's enough, along with the fundamentals, and this is where your fundamentals are really powerful, because on its own, I would probably be sat here thinking, yeah, maybe I'm unsure about this. Maybe it's a trade that I want to just hold fire and let a little bit more confirmation. Because I had fundamental backing to a weak dollar, that's what gave me the confidence to take the trade.
Yeah, I was just thinking, obviously, do you know, where you've kind of marked out that those equal highs effectively, you know, that second high hasn't broken the first high. So I was just thinking, you know, does that demonstrate that actually it's not gone bullish yet?
Which one are you talking about? This
Sorry.
one here?
No. Move to the left.
This one here?
Yeah, because obviously it hasn't broken the previous, you know, where you've got the line on the left.
Yeah, but I would say this is ranging market, okay, because you've got this equal high, equal low, okay. On an hourly, you're right, it hasn't shifted bullish yet. We're only referring to the 15-minute time frame. So your hourly time frame at this point, okay, is still bearish within that bearish range.
Okay.
It's a counter momentum play, effectively. It's a high risk play. Again, another reason why I took profit quite quickly, didn't hold it out. I was trading alongside those fundamentals. But yeah, you're absolutely right. Your hourly momentum at this point is still bearish. This is your first break on the hourly, and then your true break on the hourly is up here.
Fine.
This is part of the reason, I'll be honest with you, if you look at the rest of the structure for this week, this is part of the reason I didn't trade EU for the rest of the week. I caught that trade, and then for the rest of the week, I traded NU, which you can see, very, very clear bullish price action, and I was trading gold, okay, which again, very clear bullish price action. So I don't normally trade New Zealand dollar, okay, and in fact, you know, I've had a load of conversations with lots of you these days recently about just trading EU and USD Swiss. The reason why I took this position here is, I'll show you. Okay, so NZD-USD holds steady near monthly top around blah blah blah. The Royal Bank of New Zealand's hawkish stance. So bullish bias on the back of the RBNZ hawkish outlook on policy path. So basically, hello, are you going? Are you? Okay, love you, bye. So basically, we had a 25-point cut. So they had effectively their FOMC on Wednesday. 25-point cut. However, they said this is basically the last of the cuts. Okay, we're not going to put any more cuts in, which put a lot of faith back in investors. So for those of you who may or may not know, New Zealand's been in a bit of a recession recently, and it's been quite a negative outlook on the New Zealand dollar. And their version of the Fed, so the Reserve Bank of New Zealand, basically said that you were not going to put in any more cuts. What we're going to do instead is we're going to start building and boosting the economy now. This is the last of the cut. As you can see, it's really, really strong against the dollar, 2.42%. So these these price charts are really, really cool. So it's a heat map, shows the percentage of changes of major currencies against each other. So we had a 2.42% gain against the US dollar. So really, really strong compared to the other currencies. We had this really clear bullish move. That was when the Reserve Bank basically came out with this information. And then for me, because it was a very clear bullish move, and I had my negative dollar news as well, that's why that long for me was my kind of trade of the week. So yeah, so EU basically didn't give us a huge amount for the rest of the week. It was a bit of a difficult pair to trade. I don't normally go and look at other pairs if I'm honest, but that news kind of was thrown in my face, and it was stupid to ignore it. Again, another reason, guys, why you want to spend time on this site. I think it's really, really cool. You can also have a look at, like, they'll do like a roundup. I don't know where it is now, but they'll, like, almost every day they'll do a Forex Today article like that, and it will basically give you a roundup of what's going across in the different economies. So this is a really good site just to kind of get you an understanding of what's happening. You will find at some point, like I did this week, you'll see a little news article like that, and you'll find reasons to kind of get into a trade.
Sorry, Chris.
Yeah.
This Euro USD trade. So that slight bearish shift that you had there with the FBTB, that didn't necessarily play out.
Here, yeah.
That started to hold bullish, and then you got your first true break there. Obviously, that gave you the confluence just to take a short position up.
Yeah.
But was there anything on the DXY that gave you another confluence that was playing out?
I mean, I'll always be flicking across to the DXY at the same time. So the DXY was, you can see very, very clear structure on here. Yeah. So we had, a very clear first break, very clear true break on here as well. Okay, like that. So you've got a very clear shift on here. The other thing that I liked about DXY, you can see I've got it marked up. You see this like sloping? Okay, this real clear failure to make any new structure. And when we now, in hindsight, have that bit of price to the right, if we look at this, we've also got this kind of this arcing shape. Okay, this is, for those of you who know Wyckoff, this is your classic kind of Wyckoff reversal pattern. This is very clear buyers turning into sellers. So, I'd had this big old drop off here at the same point that I had this big climb here on EU. Wrong chart. I had this big climb on EU, and it just kind of made sense. I think, we talk about it a lot. We spoke about it in the last call about stacking your confluences, right? So when I'm looking to take a trade, I'm always objectively looking at the marketplace. What's my reasons for going short? What's my reasons for going long? Now, if my pile for going long in this example is much higher than my pile for going short, and I'm in the market to look to take a trade, then it will take the market long, okay? And for me, I had enough confluences stacked. I've met my rules. I'd had liquidity swept from down here. I had a bullish structure. That bullish structure, I mean, if we just take all of this off for a minute, okay? Although we had this 15-minute shift, if I go at one time frame, this market remains bullish, okay? Structure, and we don't actually break any lows. So though my 15 minutes shows that it's a little bit mixed, I've actually got pretty good confidence that this market's going long. The other thing that I haven't mentioned yet as well is my hourly internally had shifted bullish. So I'd had an internal first break here, and I had an internal true break here. Okay, so you can see I'm starting to build like a collection of confluences to support my trade. And this is why, coming off the point a little bit, this is why replay tools don't work for traders like us. Okay, you can't do this level of analysis when you are fast forwarding the chart and skipping a whole day's worth of price action in 5 seconds. Okay, it doesn't work, guys. If you have a mechanical based strategy where it's like, if this happens and that happens, take the trade, then replay tools are brilliant. Okay, but unfortunately, good trading isn't mechanical like this. Okay, good trading requires thought, and it requires analysis, and it requires a level of subjectivity. Yes, there's rules that you guys will follow. Of course there is, okay? However, I've been sat now talking for 20 minutes about a trade that I've already taken. So think about the level of analysis that I'm doing throughout the day. When I come into the marketplace at 7 a.m. and I don't take the trade until 2 p.m., that's 4 hours that I've spent. Terrible maths. 7 hours, fucking hell. I need to get some more sleep. That's 7 hours that I've spent, not obviously solidly, okay? I'll be on one-to-ones and various other, but in those one-to-ones, I'll be doing analysis, right? So I spent hours and hours and hours planning these trades until when I execute the trade, there's no doubt in my mind it's going to move in my direction. And that's why it allows me to get a consistently good win rate, okay? My win rates are high because I don't take every trade. And by the way, that includes some mistakes. Like if I go down to my journal for, there was a loss, I think, somewhere here. This gold, no, not that one. Here, this gold long here, okay? And if I go and look at that, my confidence score on this trade is down at 40% because look at it. I mean, internal liquidity, no shift, okay? It was a risk entry, but it wasn't really a risk entry because price hadn't reacted off that liquidity. It very clearly closed below, okay? So look, I make mistakes just like anybody, okay? But typically, if you look at my scores here to the right, my scores are typically very, very high. So for those of you who don't know what this is my checklist. So when I go and I complete a trade, okay, I have a checklist that I use. Okay, this is built into FX Bullsheet, okay? And basically, this is my checklist. So 15-minute sweep and trap, a lower time frame shift, an MSU entry, easy 2R to target. I need to be in premium or discount, and I need to take it at the key time of day. So that gives me a trading score, 100 out of 100, okay? All right, and that basically means that you'll see that most of my trades have a green score. That's what you're looking for. You're looking for your trades to have a green score. It's no surprise that most of my trades that have a loss on, okay, that one, low score, that one, low score. These ones were all good losses. This one was a win with a lower score. This one, next one, a loss with. So you'll start to see that, and this is how powerful your checklist is you'll start to see that if you meet your checklist, okay, if I could filter, and it's one of the things I want them to do, if I could filter by, oh, I can. If I could filter by confidence, yeah. I wonder if they can add that in. Yeah, I think they can. If I can filter by confidence here, look, okay, you'll see that most of my trades in this filter are, winning trades, okay, because I've got a high confidence these trades. I've had 2 losses out of this selection. Most of my trades where I've got a medium confidence, okay, losses, and low confidence, pretty much all losses. All right, so it's, again, it's just a marker to make sure you're not just jumping and rushing into trades. The reason why I get you guys to do a morning forecast is exactly for this reason, so that you can avoid making rush decisions. Because if you come to the market, let's say you've been busy in the morning, you've got a load of meetings, you've got a load of client calls, or you've got a job on site, whatever it may be, and you can't do your morning analysis. What happens when you go to the market that afternoon? You get home or you get to your desk and you jump on the charts at 1 o'clock. What do?
Start making weird decisions.
Yeah? So talk me through the process. What do? You go onto the charts and what happens? Literally, what do you do? You're on the charts, you've not been at the charts all day, you're excited, what happens?
Lose money.
Yeah, but before you've lost money, what have you got to do?
You got to mark the chart up.
Yeah, you got to mark the chart up. But do people do that? Genuinely? Do you spend time forecasting?
Should do.
Should do that, yeah.
You just take a dumb trade, you're in a rush to trade.
Just fucking rush into it, don't you? You're just like, fuck, I've not been at the market all day. Oh, Chris has made this trade, and Renee's made that trade, and Dave's made that trade. Okay, fucking hell, everyone's made loads of money this morning. I need to get involved in that. Yeah, you get FOMO, exactly. You jump into the markets and you scan. And you go through pairs that you've never looked at before. And you say, oh, Lou's just had an amazing win on NAS this morning. Or Pete's just taken a great win on gold this morning. And so you go, I'm going to go and trade gold. And you've never traded gold before in your life. And 99 times out of 100 in that scenario, you're going to lose money. Okay? That's because you haven't forecasted. You haven't analysed. You haven't taken the time needed to plan that trade, okay? And like I said, we've been here for half an hour now talking about one position, okay? That's the sort of detail you want to be looking at before you take any trade. Your trades want to be well thought out and well planned. And if they are, they will reward you, okay? And this is where tools like, using the news, AI analysis, having access to, good trading data can really, really help you develop as a trader, okay? Any questions on any of that before I move on? Because I'm just conscious of time. No? You can ask questions, guys. We were talking to the one-to-one students. It's quite funny how many times we jump off calls and then people will message me and be like, oh, I did have a question. If you've got any questions, ask them now, all right? No? All right, cool. So, what do we have for the rest of the week? Well, not a huge amount, honestly. There was a risk entry, as you can see very clearly here on Wednesday. I can't actually remember what caused that. Let's go and have a look. So if we go to Wednesday, this here, what caused this pullback? US Treasury yields. Oh, jobless claims. Okay. Again, another really cool feature about market is that you can click on specific candles and it will tell you what caused it, which is really, really handy. So we had jobless market. So did we have? Pretty sure potentially we had early news last week, didn't we? Yeah, so we had some good unemployment claims. So this is a really, really good example of where you can have a positive news impact. So a lot of people look at that and be like, well, why has the dollar pumped on Wednesday and then gone short afterwards? Why has that done that? Who can tell me? Who knows the answer to that? Why hasn't? Excuse my very messy DXY chart. It makes sense to me, but I'm sure you're looking at it thinking, what the fuck is going on there? Who can tell me why dollar pumped and then continued going short, even though we had really good unemployment numbers?
Was the positive news forecasted before, so it was already priced into the data?
Say again?
Was this forecast already expected to be positive, so it's priced into the data already?
So not the right answer, but really, really good thought process. And I'm going to come back to that question in just a moment, Jordan. Anyone else want to have a go? Why did it pump and why did it then drop off?
Because the momentum's already was bearish beforehand.
Yep. So that's good. I like that. But move away from the technical side of momentum. Talk to me a little bit more about what you mean.
Is it to do with the rates?
Not to do with the rates. Think more broad, more general.
Just to grab liquidity.
Yeah, technically that's correct. I'm talking fundamentally though. Why, when we've had such good unemployment numbers, did it not just keep going up and up and up? Why did it just have that little spike and then drop down?
I don't know enough about the news events.
Think about the US. Think about as a US as a whole. Think about everything I've been speaking about the US so far today.
Yeah, one set of news is not enough to change direction.
Perfect. Remember, okay, news events are very similar to confluences, okay? And I want you to think about pressure building up, okay, or adding weights to a scale, okay? If you continually add weights to the sell side of a scale, eventually it's going to tip, right? Similar to, a trading momentum, okay? Very, very similar. But with news and fundamentals, it's a lot slower, okay? So, coming back to Jordan's point, okay, unemployment claims were good. They were already forecasted, okay, to be bad. So, with unemployment, it's a little bit different, okay? We want unemployment to go down, okay? So that's how many people basically have signed on to their version of the doll. So, we had previous numbers of 222. It was forecasted to be a little bit higher, and the actual was lower. That's why it caused. So unemployment usually has very minimal impact on the dollar at all. Okay, it's normally on a Thursday, but it was brought forward because of Thanksgiving. Okay, this candle here, that big white candle there, was that news announcement. See, it's 1 o'clock. Look. No, it's the 1 o'clock candle, and this came out at 1:30. Okay, so this is the 1 hour chart. Okay, so that's the 1 o'clock hourly candle. I'll show you on the 30 minute. Okay, that's there. Okay, 1:30 candle. This is a perfect example of your technicals aligning. Now, a lot of people will be looking at and being like, "Why? I'm gonna buy the dollar." However, you've got to remember that there's a theme, an underlying theme, that the economy in the US is doing badly. Okay, this good positive unemployment claims doesn't negate all of this negative news. Now, unemployment is one cog in the wheel. It's a lot less important than retail sales PPI, okay? Which is the GDP, that's based upon GDP, gross domestic product. So how good the economy is at producing product and selling it to its consumers, basically, okay? So there's three internal cogs to what makes an economy move, okay? At the top of it is always interest rates, okay? That's the most important driving factor. You then have inflation, which is, are people spending money or not? And then you have GDP, gross domestic product. So is the country producing and selling its goods, basically, whatever goods that country may produce, okay? So this is a GDP read, okay? This has much more impact on the dollar than unemployment numbers. Because this didn't fit the theme, the market pumped and then dumped. Now this is a perfect example of where our technicals align, because what did it pump to? What did it grab?
Liquidity.
External.
Yeah, external liquidity, exactly, okay? It pumped, grabbed external liquidity, okay? That pump is created by algorithms, remember? So the banks use algorithmic trading strategies to capitalize on the volatility of news events. And what happened is price got to a level, liquidities were grabbed, orders were executed, and then enough sell orders came into the marketplace to completely reverse that move. Okay, so the only trade that you could have had on EU on Wednesday was a risk entry. Okay, we grabbed this liquidity low here. You could have taken it very, very simply, just with a reversal like this, risk entry like that. And again, look, I know you guys are primarily here to learn SMF technical analysis, but hopefully you're starting to see how they go hand in hand together. Because if you had a good read on the market and a good understanding of where the market is flowing, you'll understand this is just a liquidity grab. Yes, we had positive news for the dollar, but it's not more important than retail sales. So this trade then becomes a brilliant trade to take. I can't remember what I was actually in on Wednesday, because I didn't take EU. What date was Wednesday? Wednesday was the 26th, wasn't it? 26th. Oh, I took the Swiss sell. I took this one. And to be fair, I didn't get in at the risk entry. I took it with the confirmation. We've just discussed that on the one-to-one call, so I won't go into too much detail. So I took the confirmation entry there. For me, gold pumped as well on the Wednesday, which was here. Okay, so we had a nice gold pump as well as a result of that news. Oh, that's the risk entry I took. I took the gold long. I took that gold trade long, which then I held for the rest of the week, as you can see. Beautiful trade, and Lou, if she's still here, is hoping very much so that we hit that monthly level on Monday, right?
I know. Well, this is the first time I've ever held a trade.
Really?
I always close my trades. I've never held it. And then spending a bit of time on.
But hadn't you taken 80% off already?
Yeah, so I took 80% off at my first TP. Then I took 50% of that off at my second TP. But
So hang on a minute. Whoa. Right. How much did you risk on this trade?
I'm not sure. I'll send you on. I've sent it in my analysis.
Because if you're still floating at 2% and you've taken 80% off and then a 50% off, so you've only got 10% left on this trade, and then you are floating at 2.
No, because remember that when I put my lot size on, I accidentally put an extra 0 on it. This is on a demo account, so I put the extra 0 on, which is why I was like, I don't know whether to reset my demo account, because like in reality that size.
Oh, okay. So you put a 10% trade on.
Yeah, so I put on.
Nice.
I accidentally put on like an extra 0, which although it's played out, it's fine. It's going to skew my data collection now, so I'm not really able to do it. But I've still followed the same rule. So I would usually take 80% off.
Yeah.
Up in the trap, and then I would take the rest off at the other side, but it pushed through with quite a lot of strength.
Yeah, and this is where your manual journal can be really, really helpful, because what you can then do with these is you could log that trade, and let's say that trade was this one, for example, okay, and that trade came in at 15,060 for argument's sake, because it's 10% or 100%, sorry, 10 times more. You can manually override these things, okay? So you could put in, you could put in effectively what you would have earned if you risked it properly, and then it doesn't skew your data as much. Your data will be skewed in your trading account, but in your journal, it will be accurate and it will be correct. So using something like this, or even the, even this one here. So I'll go into, I'm not sure who this is. Sorry if this is yours. Yeah, going into here, you can then manually, so let's say you made 15,000 on the trade, but it should have only been 1,500. You can again manually input it in there. So at least then your data is correct when you go back and review it. All right. But I know with you, we're going to be working on your journal soon. So yeah, Lou is very, very much hopeful that her trade, which I think you took this one, didn't you? You fucking mad woman. So we had CME outages. We had like gaps in price. The market was all over the place, and she traded like an absolute boss and put 10 times the lot size on. Fair play, mate.
See, to be fair though, because
fucking animal.
I know, right?
Because of the market conditions, though, I waited for like an FB and then a TB and then a pullback.
Yeah.
But before I entered, so I do feel like I had some risk management there, which is the only reason why I entered long. And luckily, it just had that strong bullish pushes, so I didn't really feel the need to close it early. And I'm trying to be more disciplined because I'm moving between futures and forex, the scalping, this holding. So I'm really trying to practice. Yeah. Holding a trade and not freaking out once it starts pulling back. Yeah. So although my lot size was absolutely off, I'm still taking the win with my
100%, mate. Own it. Be proud of it.
Holding it, because I found that really difficult. Yeah.
No, mate, you smashed it, mate. And you, as you know, we've spoken about it before. I'm not going to make your head any bigger. You are smashing it for where you've come from and kind of where you are now. It's seriously impressive, mate. So yeah, good work, good hold. I hope to God it hits your. I mean, if you wake up to a massive gap on Monday, I'll be really, really upset for you. But we should be fine. The fundamentals again stopped, and I feel like this has been a bit of a fundamental session. But I think it's really important to. I was really hesitant, by the way, about talking about fundamentals because I know you guys want to understand technicals, but I'm just using them so much more in my trading these days, more than I ever have. And it comes from obviously having a better understanding and seeing it influence it. But I use it in pretty much all of my trades now. And do you know what the big change for me is? Not trading Mondays and Tuesdays, although I took a trade on Tuesday this week. Not trading Mondays and Tuesdays has allowed me to almost allow some of these news events to happen and then build a playbook off the back of it, if that makes sense. So it's a really, really important skill set, and I didn't realize how important it was until the last few months. And look, the results speak for themselves, guys. I'm not here to fucking show off or anything like that, and I hate this sort of stuff, if I'm honest, which is why I don't talk about money all that much. But all of my trades, my good trades this week, have been built off a fundamental analysis. And look, some people might even say that's not even a particularly high win rate. Some people, the Instagram lot would say you need 80%, 90%, okay, which is obviously unrealistic. But I've had a fantastic month. I'm sat on a return of, I've still got my Thursday and Friday to complete, but I'm sat on a return for the last month of less commissions. So I did 22% this month, 22.36%. Okay, you can see it there. You see it? Come on. Focus. Yeah, let me turn the blur off. Just trust me, all right? I can send the screenshot across if I need to. 22.36%, less commissions of $2,000, so, and swap of $2,000. So I'm sat on an 18% gain. Which is fucking like, I aim for like 2-3% a week, like on average. And, I've had a phenomenal month. And I'm, chuffed to bits that I've had such a fantastic month. But the point I'm getting at is it's all built off fundamental backing to my trades. That was the big key difference this month, is I've really spent a lot of time understanding what's going on with the news and what's affecting price, and that's why I started working with these guys as well. I've got a meeting with them today, which is really, really interesting. So look, it goes hand in hand together, okay? If you're trading any volatile asset, if you're trading gold like Wilco, I know we've been speaking about it, but Wilco's now spending a bit more time looking at his fundamentals as well, because he's a gold trader. If you're not understanding the fundamentals, trading gold is just like you're again, I use the same analogy I used with the one-to-one guys. It's like turning up to a knife fight with a sharpened spoon. Okay, I think for me, I think the whole
you can check the candle and see what happens. It just gives you a bit more confidence. Like if you're in a trade and it fucking goes against you, you can have a look and go, well, actually I was right, and the only reason it did fail was because fucking Trump did this, or the news did this. You know what I mean? And you could be aware of it beforehand as well.
And there's plenty of times where you might have been looking at the market like this and seeing this big move on Wednesday, wherever it was, go back to the dollar, seeing this massive move on Wednesday, and then stressing yourself out and thinking, oh shit, that's my trade fucked, and maybe you were in a short from those liquidity points, you go, that's my trade fucked, but actually understanding that it's just one news and it's not going to make a huge amount of impact, it's only unemployment, then allows you to get into potential other trades. And Wilco used that example perfectly. You get stopped out because Trump's dropped a tweet. Well, often that's not going to have a momentum changing impact on the marketplace. It might make an impact, short-term impact, it might impact that day, but the underlying theme of that market being either bullish or bearish will always prevail, okay? And one-off random news events aren't going to make much difference to it, but we have to be aware of them. You've got to understand why the price is doing what it is. It's not just about liquidity and momentum. That's our technical side of it. Understanding from a macro view where market is going to go next. I'm going to go into next week now, and unless I get some particularly positive news for the dollar, I'm just going to continue selling it. It's as simple as that. I've shifted bearish on all time frames now, other than the daily, but I failed to make a new high on the daily, so this is a good warning signal that we could continue to short, and we're probably going to at least hit that weekly level, okay, which holds good hope for EU climbing to its weekly level. Good hope for gold climbing to its monthly level and then probably through, because if dollar continues to drop, then safe havens like Bitcoin and gold become, particularly profitable. I don't look at Bitcoin, but I can almost imagine, maybe not then. This week, however, as you can see, okay, we've had a positive, and I don't understand Bitcoin. I don't know what else is impacting it, but it doesn't look very good for Bitcoin, doesn't it? Fucking hell, it's below 100. But whatever, I don't trade it. Gold, however, has been pumping since this negative themes come back in for the dollar, because it becomes a safe haven, all right? So, yeah, just something to be conscious of and aware of, and just start researching and learning it as much as you can now. And if you have any questions, obviously fire them at me. I'm not an expert, but I know more than most. So if you have any questions, then please let me know. All right? Cool. That was a really good session, guys. Thank you very much. Thank you for your questions. Thank you for your input. It's always lovely when you guys have something to say and something to ask. So thank you for turning up today. It's been brilliant.